In the stock market, there are different strategies investors can use to navigate the ups and downs. These strategies can generally be categorized into two broad approaches: defensive and offensive. Each has its own set of principles and tactics, and understanding these can help investors make informed decisions. When planning to be defensive or offensive, timing can be massively important. Whenever we observe a sector in the stock market that is enduring a lot of negative sentiment, or a sector that is benefiting from a ton of positive sentiment, the timing of management's actions can vastly change the outcome. Acting too soon in a defensive nature can cause you to lag behind your more aggressive peers. However, being aggressive for too long can cause you to have a cataclysmic fall to the other side, meaning that a defensive management team may not post the same stellar results, but is less likely to post harmful results over the long run. A muted reaction from the market is usually caused by a conservative management team versus an excited reaction from the market due to those teams who are more aggressive, whether positive or negative. All right, let's dive into the commercial mortgage REIT sector. This area has seen some significant movements recently, and it's crucial to understand the dynamics at play. The commercial mortgage REIT sector has been the source of drama this earnings season. We saw one of our holdings, Apollo Commercial Real Estate, ticker ARI, rally double digits as it produced an outlook for growing its portfolio and redeploying capital that was previously tied up in non-performing loans. Then we saw another of our holdings, Ares Commercial Real Estate, ticker ACRE, drop double digits as its management issued an outlook that it would take more time to deal with its defaults, and it didn't expect to grow its portfolio anytime soon, necessitating a dividend cut. Now, turning our attention to BrightSpire Capital Inc., ticker BRSP, we'll analyze their recent earnings and what it means for investors moving forward. It's been an interesting quarter, and there are some key takeaways to consider. Today, I want to dive into the earnings of another commercial MREIT that we've covered before to see where their earnings landed them. Let's dive in. BrightSpire Capital Inc., ticker BRSP, yielding 10.3%, is a commercial MREIT which owns and originates a portfolio of loans or mortgages tied to commercial properties. The commercial real estate market has been hit hard by rising interest rates and reduced interest from large companies in owning or leasing properties when they became less economically attractive. The earnings from BRSP when compared to ARI and ACRE were right in the middle. BRSP management warned us that adjusted distributable earnings would decline, and they did to 18 cents per share. However, it appears the dividend was reduced enough and earnings continued to out-earn the dividend. Book value took a large hit in the second quarter of 2024, but has been relatively stable quarter to quarter since then. Throughout 2024, BRSP's focus has been on maintaining a high level of liquidity while managing the loans on its watch list. In the fourth quarter, we saw some progress with 3 loans coming off of the watch list and 1 loan being added to it. BRSP provides investors with significant details about the loans on their watch list. The largest loan by far is the hotel in San Jose in California. BRSP has filed paperwork to foreclose on the property, and the company that owns it is currently in bankruptcy court. That is good news because the owners have been working to find a new loan to refinance BRSP and a mezzanine loan owned by Hilton. There are news reports that a new lender has been found willing to refinance the entire mortgage. So while the loan is a 5 on their risk scale because it is in active foreclosure, there is a lot of reason to believe that BRSP will experience a full recovery of their capital on this loan. In the earnings release, management commentary was short and sweet. Looking ahead, we expect to continue to resolve watchlist and REO assets and grow the portfolio and earnings through new loan originations. On the origination front, BRSP originated $53 million in new loans. BRSP's strategic shift and future outlook is quite intriguing. The company has been making some significant changes in its approach. aiming to position itself better in the market. These strategic moves are expected to enhance their performance and provide a more robust foundation for future growth. That isn't a ton, considering they had $93 million in loans repaying. And in the last earnings call, management suggested that they wanted to increase the overall size of the portfolio by approximately $1 billion in 2025. However, this should be viewed in the context that BRSP has not originated a new loan since Q4 2022. That's right, for 2 years BRSP has not been in the market making loans. It has been coasting on its prior portfolio, which was $3.5 billion in loans, and that portfolio has slowly shrunk over the past 2 years. So coming from a complete dead stop, we can expect it to take time to ramp up their origination pipeline. The company noted in their subsequent events that they have originated another $53 million in loans so far in 2025. That means in Q1 we will see higher originations than in Q4. BRSP pulled in their horns before everyone else did. Management allowed the portfolio to shrink from over $3.5 billion to about $2.5 billion. Now, they are originating enough so that the portfolio isn't shrinking. In the first half of 2025, we expect that BRSP's portfolio will be growing. Ultimately, that is a positive for distributable earnings, and that will lead to the dividend growing again. We expect that in the first quarter, management will keep the dividend where it is, and given management's history of being somewhat conservative with their payout ratio, it will likely remain flat for the second quarter as well. It will be the third or fourth quarter where the portfolio is growing and BRSP is able to redeploy capital that is extracted from their watchlist loans, that a return to dividend growth will be on the table. This earnings likely won't be seen as a home run by the market. However, it is an inflection point for the company where they have turned from 100% defense to playing some offense. For years, BRSP has been hunkered down, waiting for economic conditions to change, and in the fourth quarter they decided conditions changed enough to resume growth. BRSP is trading at a bargain price and investors should take advantage of it. So, to wrap things up, understanding the commercial mortgage REIT sector requires a good grasp of the market dynamics and a keen eye on interest rates. It's crucial to diversify your portfolio and, stay updated with the latest trends. Always remember, careful analysis and strategic planning are key to making informed investment decisions. Thanks for joining us on this journey through the world of commercial mortgage REITs. Until next time, happy investing. BRSP has decided to shift its footing. BRSP has spent numerous quarters allowing its portfolio to wind down and standing in a purely defensive position. This allowed them to avoid many of the pitfalls their peers have fallen into by being overly aggressive during a period of sector-wide weakness. Now, they're in the process of ramping up their portfolio again. We're seeing a complete change in their focus, from being completely defensive to being more aggressive in their lending. This will allow them to see their earnings ramp up. It's hard to generate the same level of earnings from a portfolio that's only $2.5 billion versus a portfolio that's $3.5 billion in value. This ramp-up is a benefit as they'll have the ability to cover their current dividend, as we've seen from these most recent earnings, and will continue to support it as they ramp up. In dividend investing, it's possible to unlock higher levels of income by investing a portion of your portfolio in downtrodden sectors. Often, they are undervalued and higher yielding due to the negative sentiment that swirls around them. BRSP is a great example of a firm that sold off with peers in sympathy, but took a more defensive approach, allowing it to be on solid footing for the sector's recovery.